It means that you will either be cutting edge and capable and among that top fraction of a percent down to 10% of the population who is cutting edge and using it and accelerating, or you will, if you're in a thinking job, be at risk of being replaced. We're coming into a world where we can automate everything. The evolution of man was we had the agricultural era, and there was no real inventiveness. And then man invented the machine. And what the machine did is it replaced man's physical necessity. So men used to be like oxen in the agricultural field and so on, and they were replaced by tractors. And then we entered the industrial age. First, you had the printing press that allowed people to learn. And then you had these inventions, the Industrial Revolution, the first Industrial Revolution. And what you had is the replacing the physical that man would do in factories then and so on. And so the way I look at it is I look at the human body and I see like it's replacing the body and so on. And it's coming up higher and higher. And then it replaces some aspects of the mind that you can computerize. And it's coming up, and it's replacing higher and higher levels of thinking and reasoning.
Most conversations about AI focus on productivity and opportunity. Ray Dalio starts somewhere completely different. He believes AI is transforming the economy, but he also warns it's changing the value of human work faster than many people realize. His message isn't just about technology. It's about who adapts, who gets left behind, and why this shift could reshape both the job market and financial markets at the same time.
What they call a bubble is when the price goes up a lot and companies do very well, and then it collapses. And that has implications for the economy, that has implications for the markets, like 1929 bubble, okay, or the 2000 bubble, okay, which was the dot-com bubble.
Does it impact real people as well? Because you said the economy.
It did 1929 bubble bursting impact real people? Yes, the Great Depression followed. Because what happens is there's a new technology that comes along that's revolutionary. The dot-com bubble, which was 2000, all the stuff that we have that's wonderful new technology. People get into that technology. They say, that's miraculous. I can bet on that. I'm sure it's going to be successful. And then they bet on it. And sometimes they borrow money to bet on it, and they lose sight that the price of it matters. So it goes up, and it's everybody's thing, you know? It's like right now we're very excited about AI, and we should be very excited because it's going to be revolutionary changes. And then at the same time, so I want to buy some of that. And everybody wants to invest in some of that. And what they do is they don't pay attention to the price, and there's a certain mechanics. People will borrow money. Wealth is not the same as money. So you see a lot of people getting wealthy, but you can't spend the wealth. You have to sell the wealth to get money because you can only spend money, right? So what happens is when they need money, for one reason or another, taxes change or interest rates go up, and so they have to pay their debt service and so on. There is a pricking of the bubble so that what happens is it falls, okay? And when that happens, people lose money. And as they start to lose money, the process works in reverse because when they made a lot of money, they have a lot of collateral. Right? They can go borrow money because they're worth a lot, and that compounds on its way up. And then when it comes down the other way, it works the other way. Okay, now you got to pay your debt, and so on. Then you have to start to sell assets, and then there's less demand for things, right? So there's less demands because if you're losing money because you put some money in the stock market and the company and so on, you're going to spend less. And as you spend less, then somebody else's income goes down, right? You don't go to the restaurants. The economic downturns that typically follow a bubble, like the Great Depression. The late 20s was fantastic. If you talk about changes and experiencing, this was the first time there was electricity in houses. So it was the first time you would have refrigeration and you would have lighting in houses. This was the first time that you had cars popular that you could get. First time airplanes, first time you had radio. And so everybody knew that they were going to be great in the future, and they were great in the future. But at the same time, what happens is as they buy them and stocks go up and they borrow money to buy them and so on, and the profits don't live up to the price, then that causes this other dynamic, and it produced the Great Depression.
So let's say that I buy this, and this is a unit of artificial intelligence. So let's say I buy one share in one of the big AI companies right now. Because investors are so excited about AI, they value this at $100. This unit that I have here, they say it's worth $100. So my net worth is now $100. I go to the bank because I have this net worth, this paper worth $100. And I ask the bank for a 50% loan on this thing that I own. They give me $50. Now I have $50. And then something happens in the economy, which means that the investors who have invested in this, and investors generally, now need money to pay off their other debts that they have. So this could be a war, it could be some kind of event that takes place. And suddenly everybody rushes to sell their assets like this one. And so when I go to sell this, the price of it has now plummeted to say maybe $25, but I took a loan at the bank for $50. So I owe the bank $50, but now this thing that I have that was worth $100 a couple of months ago is now worth $25, and I'm $25 in the hole. So I have to quickly sell. And then with everybody selling, all the price of assets drops, people stop spending money at the restaurants, like you say, there's less money around, and then the bubble has burst and we're in this sort of declining.
You got it.
Okay, good. All right, fine.
And it happens because it must happen. I mean, meaning in these tremendous changes, there's very little that's known. So anybody who's in the business of making AI can't be precise. They don't know exactly how much money is going to come in, right? So there's either one of two things. You either don't invest enough and then the competition runs away, or you invest a huge amount and you can't be precise, okay? And so when that dynamic happens, it's a problem. So yes, you said it very well. So I'm going to repeat one other thing to emphasize. What's quite common now is you can issue stock for, let's say you raise $50 million and you value the company at $1 billion.
Mm-hmm.
Only $50 million was actually spent on that company. But now if you raise that, you're a billionaire.
Mm-hmm.
Okay? Because the accounting value of that, what do you own? You own stock that is valued at $1 billion. Nobody paid $1 billion or whatever it is, right? And now you own that stock. But that stock you can't spend because you can't spend wealth.
Mm-hmm.
In order to spend it, you have to sell some of that stock to get money.
Yeah.
Right? And quite often there's an interest rate rise because let's say as there's a fever and there's an inflation, then the central bank wants to try to put the brakes on that a bit. Okay, what does that mean? It means people who have debt, in a sense, have to come up with more money. Because when you hold the debt, you have to come up with money to pay the debt.
So
and that
downward
dynamic
spiral
works. Between us, we've said it clearly.
Yeah.
I think we understand the dynamic.
Dalio isn't questioning whether AI will change the world. He believes it absolutely will. His concern is that investors may be making the same mistake seen during previous technology revolutions. When excitement pushes prices far beyond realistic expectations, borrowing increases, speculation accelerates, and eventually even a small shock can trigger widespread selling. History shows that groundbreaking technology and painful investment bubbles often happen at the same time.
Now, we have another problem that's existing, okay? So we're talking about the bubble, okay? But we also have some other things that are going on that happen around the same time. A big gap between the rich and the poor, and which also means the left and the right, the politics of it, right? Just as we have now. When you have the downturn, then you have people at each other's throats. So if we take politics, what you see is that they don't have enough money, that the governments don't have enough money. We have big budget deficits. Okay. Where do you get the money from in order to pay those bills? The UK has had, I think, 6 out of the last 7 years, there's been a new prime minister. And because there's not enough money for the government. And so what you start to see is people come in with their claims, but there's this, how do we get the money? And then people run who have money. They say, I don't want to be in this tax zone. That's going to be, and then they leave. And so there's a domestic political problem that is not people compromising the same way they used to compromise, right? So now you have the politics, which compounds this. And then you have a world, this is what I call the big cycle. You have a world in which also the geopolitics changes. By geopolitics, I mean country to country. Okay, there's a system under normal circumstances. When there's a more dominant power, they impose their order, and that becomes more peaceful. But when you have arguments of how things should go, those arguments start to turn into conflicts, right? And so those things tend to happen together. That's why I refer to that as the big cycle, that dynamic. Now, that is the confluence of the money, the internal conflict politically, and the external conflict, which is what we're going through. And the problem is, I think, that people don't know the cycle. So every day we go to our sources of information and you see this latest news, but they don't connect the dots in understanding that cycle.
This is the point where Dalio connects everything together. Instead of treating AI, debt, politics, and geopolitics as separate stories, he argues they're all part of the same historical pattern. According to his research, economies move through long-term cycles in which debt builds, asset bubbles form, wealth becomes increasingly concentrated, and political tensions rise. Technology keeps advancing throughout these periods, but the financial and political system periodically resets. His message is that today's headlines may look unrelated, yet they could all be symptoms of one larger cycle.
Those who benefit from it are those who are the capitalists with the ideas that replace the workers. And so if you look at, there's revenue for businesses. When you buy something in a store, there's revenue, okay? And if you look at the share that is going to workers, you see that share going down. And if you look at the share that's going to those who own that business, that share is going up. That's, how do they share that revenue in terms of the cost? And you see that that's rising. And so this is an evolutionary process. And it's true that what happens is you get more free time, okay? So now the society has to think, how do I deal with this? So, for example, the work week, which used to be, a 60 or 70-hour work week, goes down to less than a 40-hour work week, and there's more time. But there needs to be, how do you create a bottom? And so we're going through this phase in which there is this upper end that is making incredible amounts of wealth, as we described, and then this lower end that is then having these challenges. We have a relatively good economy, and the difficulty of college graduates to get employment has increased significantly. And I can tell you that in many businesses, it becomes more of a pain in the neck to have a college graduate, let's say, do it. You have to train them, and many of those tasks, many of that thing can be done very quickly with the AI and with computerization. And as you get into robotics, you're going to have that happen, right?
The speed of the disruption that we're seeing, because of the amount of capital that's flowing into these AI frontier models like the Anthropics and OpenAI, et cetera, is quite different from anything else, sort of the historical precedences we've seen through the Industrial Revolution, where it took time to build the tractors.
There's an element of speed. What happens usually is the bubble bursts, and now you have the cyclical dynamic of that while the technology, evolves. But the supply, demand, and the debt problem that we just talked about then come in. And so unemployment is due to typically some sort of a combination of a financial crisis that, like we talked about, the debt and stocks going down and people not having collateral and then therefore not buying assets, and that dynamic, that causes the unemployment rate, that factor.
That's the sort of economic reasons. But in terms of the AI agents, robotics being able to replace you, I've sat with Dara from Uber, and Dara said that he imagines in the future, the 9 million riders that they have around the world doing deliveries will be replaced by autonomous vehicles, autonomous robots. Those 9 million drivers' careers that you have will be out of work, conceivably. Talking about being honest about the situation.
Yeah, I think, again, it goes to physical AI as well, right? So I think 20 years from now, you can imagine that those 9 million will be 20 million AVs maybe. But we have time between now and then, partially because we don't operate in the virtual world, right? We operate in the physical world. You have to get the regulations up. You have to build the cars. You have to build the sensor stacks. The models have to get there. So there is time between now and then, but you can imagine the majority of our trips being fulfilled by robots of some kind.
The unemployment rate gets very influenced by the bubble bursting and the economy going down. You see that spike.
Mm-hmm.
You certainly have the evolutionary change that you're referring to.
Okay, so it's both.
In other words, there's this evolutionary thing in which they, like he says, the tractor replaces the laborer, or the assembly line worker as technology is replaced. And that is an evolutionary thing that goes continuously for, many years, and in the way that you're describing. Because you asked about the unemployment rate, I just wanted to emphasize that the unemployment rate is very heavily affected by that bubble bursting.
The discussion now moves from financial markets to everyday life. Dalio believes AI won't affect everyone equally. Those who own productive assets and know how to use AI may gain enormous advantages, while many routine knowledge jobs could face increasing pressure. His warning isn't simply about technology replacing workers. It's about what happens when economic slowdowns and automation reinforce each other.
What's your perspective on Bitcoin? I know the market in Bitcoin is down at the moment.
I have about 1% of my portfolio in Bitcoin because there's different kinds of money. And the money that you can't print, that's one kind. This is the other kind of money that you can't print.
Gold.
Yeah. You cannot crack it with technology. You can hold it. You own it. There's a saying that it's the only financial asset that is not somebody else's liability. Somebody has to give you something for it. It has that. So in my category of wanting, let's say, make sure that I have some hard money, which for most people should be between 5 and 15% of their portfolio, I prefer that. I'm pointing to the gold bars here rather than the Bitcoin.
Is it still, in your view, a gold-like asset?
Yes, it's a type of money that can't be printed, but there are technologies that can hurt it. In other words, if there's quantum computing and it can be monitored by governments and so on, it could be taxed. And digital currencies are somewhat similar.
But you don't like Bitcoin as much as gold because of privacy reasons as well.
And when the governments say, I don't want it, they have the power, therefore, to do whatever they want with it. And central banks will not own any significant amount of that because of the reason I said. They want their transactions to be private and in their control. Think about how different it would be for Russia. Okay, they confiscated these kind of other assets. They didn't get these.
Gold.
Okay, gold. And so what you're seeing, even particularly in this time of conflict, is that there's a sense that if I'm holding this, others won't get it.
Rather than trying to predict the next winning asset, Dalio focuses on preparing for uncertainty. His preference for gold reflects his broader philosophy of diversification and preserving purchasing power during periods of financial and geopolitical stress. Whether viewers agree or not, It offers insight into how one of the world's most successful macro investors approaches risk.
So if you had kids that were 16 years old now, Ray, and they said, Dad, what do you think, based on everything you know about the future, what should I be doing?
First of all, there's the question of what matters most in your lifestyle. So I'm going to get philosophical, not assuming that the highest income is the best, okay? Because happiness, you want happiness and health. And so in answering your question, there's very little correlation between the amount of money you have and the level of happiness that you have past a basic level. And so I could answer your question first, which the obvious way is to say to earn the most amount of money. And I want to start off in saying that, my experiences and so on is like I love being in nature. And it doesn't cost me hardly anything. I mean, it depends where your pull is. And so don't lose sight of your pull and what it's about. What you want to do is you want to get above the level that you don't have to panic. We just earlier discussed how many months can I live, and to be able to secure that and to be excited and have that passion or whatever it is, the life that I want to have. So I just want to emphasize, keep in mind of that. But then also, my principle is make your work and your passion the same thing, and don't forget about the money part, right? So know your nature. This is what I tell my grandkids, okay? Yeah, you have a feel and you also have a nature. It's not just your preferences. People think differently. Some are more adventurous. Some are less adventurous. Some are more conceptual or artistic and can think with imagination, and they love doing that. Some people don't like that. Some people want to make life should be more concrete and more certain and so on. That's your nature. You're a lot born with that nature, and you also learn it in your earlier years. We know this of how neuroplasticity works and so on. So we are all on a journey to find the match between our nature and our path. And you find that path, but you can't forget about this money part
So
while
on that
you're
point,
pursuing that path.
don't forget about the money. So if your, grandkids came to you and they said, I want to become a lawyer, would you say, listen, that's forgetting about the money because I think AI might take that job? Or would you say yes? Would you, if they said, I want to
I think
I want to do a thinking job.
let me say that history has shown that it's not the most intelligent people or the most intelligent species that are the most successful. And it's not necessarily those that work the hardest, although these things are very important. It is those who species and people who are also most adaptable. And so there's going to be great change in your lifetime. Okay. And so, yes, today it's artificial intelligence. But if you went back not long ago, we didn't even know artificial intelligence would exist the way artificial intelligence today exists. And the future will be like that. So when you're nailing it down, it used to be make sure that you know how to code. And then Claude Code comes along, and all of those who are coding are worried about their jobs. Okay. So what is it that matters? Okay. It is the approach to life in a sense that produces that, the general understanding and also the adaptability. I think a lot has to do with knowing yourself. That's why in building Bridgewater, the personalities of the person were very important in what suited their jobs. And then I built this a personality profile test. Then I made it online for anybody to go take. It's about 30 minutes. It's free online. It's called Principles U. That'll tell you a lot about your nature, okay? But your goal is to find that nature and what are the paths. And there are several paths, and they're constantly changing to find that nature, okay? You experiment, you learn, okay? But, you probably were pulled into this job by your nature, right? And so, and you made it work. And here it is. It works in all of those dimensions. And it's like that for everybody.
Yeah, it's interesting because you look forward to the future, and I think if I was a young person at this stage and I was trying to set out where to aim my career, I would be more confused now than ever before, especially because they're also contending with this unemployability crisis amongst entry levels.
But if you're talking about you'd be confused because you can't anticipate the future, that's right. That's just the way it is, right? And if you say, what is it that I need given that reality? Okay, I need to learn, I need to know how to maximize the use of tools like AI to be able to increase what I know, and how do I use that to the best of my ability to be as useful as possible doing things that fulfill me. Okay, so that's what you need to do. You're asking what you need to do. Just get over the fact that you don't know what the future is going to be like. So if you're looking for an answer, is it going to be a computer programmer? Is it going to be this or that? No, just maximize your ability to know, which is so easy to do nowadays, right? So maximize that, and then use that to maximize your usefulness and jobs that make you happy. And that's the thing that's the best I can give you in terms of more my 16-year-old. That's the best I can give them, because I don't want to mislead them that it's the thing, that it's the particular job.
After spending the interview explaining bubbles, debt cycles, geopolitical change, and artificial intelligence, Ray Dalio ends on something surprisingly practical. He doesn't claim to know exactly which jobs will survive or what the economy will look like in 10 years. Instead, he argues that adaptability has always been the defining advantage throughout history. Technologies will change, industries will change, markets will change, but people who continue learning, embrace new tools, and develop skills that complement technology will be in the strongest position. His final message isn't to fear the future, it's to prepare for it.